Imagine sitting across from an IRS auditor who asks you to prove a $12,000 deduction, and your entire system is a shoebox of faded receipts and a bank statement you share with your groceries. Deductions get disallowed not because they were fake, but because they could not be proven. That is what bad bookkeeping costs. The good news: first-year bookkeeping is genuinely simple if you set it up before the mess begins. In this video, the exact basics: separating your money, choosing a system, a 15-minute weekly routine, and the records the IRS actually expects. This is general education, not tax advice, so lean on a professional for your specifics. Bookkeeping is not about pleasing the IRS. That is just a side effect. It answers the only questions that keep a business alive. Am I actually profitable? Where is the money going? And can I afford this next move? At tax time, clean books turn a nightmare weekend into an afternoon, and every properly recorded expense directly lowers your taxable profit. Sloppy books do the opposite: missed deductions, tax overpayment, and total blindness about whether the business is even working. Rule 1: before any software, open a dedicated business bank account and use it for everything business and nothing personal. Mixing funds destroys your records, makes tax prep miserable, and for LLC owners, it is worse. Commingling money is exactly what lets a court pierce your liability shield and reach your personal assets. Add a separate card for business purchases so every transaction lands in one clean stream. This single habit does more for your bookkeeping than any app ever will. Now pick where the records live. 3 honest options. A spreadsheet. Free, fine for a simple business with few transactions, but everything is manual. Free bookkeeping software, which connects to your bank and categorizes transactions automatically at zero cost. Or paid software like QuickBooks, more powerful, better reports, worth it as complexity grows. Most first-year founders do great starting free and upgrading when volume demands it. Also know that most small businesses use cash basis accounting, recording income when received and expenses when paid, which is the simpler method and usually the default. Here is the routine that separates organized founders from April victims. Once a week, 15 minutes, categorize the week's transactions into simple buckets like advertising, software, supplies, contract labor, and travel. Snap or file any receipts. Send any invoices you owe clients and note who has not paid you. That is it. Done weekly, it is trivial. Skipped for 6 months, it becomes an archaeology project where you cannot remember what that $97 charge was, and unremembered expenses become lost deductions. What does the IRS actually want? Records that show what you bought, when, from whom, for how much, and the business purpose. Digital copies are perfectly acceptable, so photograph paper receipts and let them live in the cloud. Keep records for at least 3 years, and many professionals suggest longer. Bank statements alone often are not enough in an audit because they show a payment happened but not what it was for. The receipt plus a category plus a note equals a deduction that survives scrutiny. Once a month, do 2 things. First, reconcile. Compare your books against your actual bank statement and fix anything that does not match, catching errors, duplicates, and sneaky subscription charges. Second, review. Look at revenue, expenses, and profit for the month and simply notice the trend. This monthly habit is when bookkeeping transforms from tax chore into business intelligence. And when transactions grow beyond your patience, hiring a bookkeeper for a modest monthly fee often pays for itself in recovered time and found deductions. Let us recap the system. Separate business money completely, 1 account, 1 card, no commingling. Pick a home for your records, free software is plenty at the start. 15 minutes weekly, categorize, capture receipts, invoice. Monthly, reconcile against the bank and review your profit. Keep digital records at least 3 years with purpose noted on every expense. Do this from day 1 and tax season becomes an afternoon, not a crisis. This is general education, not tax advice, so involve a CPA for your situation. If this helped you start clean, subscribe to Founder Filing and check the description for free resources, including our starter checklist.